Welcome to our lecture. Today, we want to attach the figures to the income statement for a sole trader that we looked at the other day. Okay, so today, we want to solve a question. So here I have a question, and the question reads as follows. Peter Mwale runs a carpentry shop in Sparta compound. His financial reports showed the following transactions. Number 1, sales for the period 71,490 kwacha 25 ingwe. Sales returns 790. Purchases for the period 29,400. Rent for the shop 10,000. He had paid 3,400 for rent in advance. So this is a prepayment. Then tables and chairs valued at 5,900 as opening inventory. Electricity total for the shop was 1,200 and 1,400 was outstanding for last year. So you can see outstanding owing. Water bills were valued at 620. Transport for the period was 3,000 kwacha, and the commission received was 4,100. He received a discount on planks for 2,800. Salaries for the workers 6,000. Then the question goes on. It says 10% of purchases. 10% of purchases was carried inwards. 10% was carried inwards. Then it goes on, says telephone bills were valued at 980 and he sold the tables and provided transport costing 1,000. This is a carriage outwards. Then the closing inventory was 15,550. Okay. He also allowed a discount of 571. Required. Prepare income statement for the year ended 31st December 2022. So this is a question from a sole trader. And we are required now to prepare an income statement for this sole trader called Peter Mwale. Okay, so we are going to do an income statement here. Allow me to remove this question so that we are able to work properly. So I'm removing the question so that we do our computations nicely. Alright, so we have been told that the sales for the year we are valued at 71,490.25 ingwe. And in the question, I got the figure which says sales returns. So we have sales returns. So the sales returns, you less them, you subtract. So less sales returns. Okay. Sales returns here, the figure is 790. Okay, when I do my subtraction, I'm doing my subtraction, 71,490.25 minus 790. So I will have 70 kwacha, 70,725. 70,725. Okay, like what we discussed last time. So to this one, we have to add the opening inventory. So in this case, we are now adding the opening inventory. Okay. Opening inventory. What is the figure for our opening inventory? What is the figure for our opening inventory? In the question there, it has told me to say opening inventory is 5,900. So we have 5,900 as our opening inventory. So for the sake of adjustments, I can even put it here, or I add it direct, it's okay. Now allow me to put it here, because we still have purchases that we need to add. So I'll put it here, 5,900 as our opening inventory. Okay, then the next one on the question there, I can see the purchases. Okay, so add purchases. So the figure for purchases in the question, is 29,400. 29,400. So I'll put it here. 29,400. Why have I put it here? Because it has an adjustment. We need to adjust. Okay? There is an adjustment that we need to make. That is the carriage inwards. Okay? So we are adding carriage inwards. Carriage inwards, it said 10% in the question. It said 10% of purchases is carried inwards. So let me do the working here. 10% of this. Okay, 10% of this gives me 2,000. It will give me 2,940. Add this. Okay. So when I add the two, allow me to do my calculation. When I add the two, okay, I'm getting 32,340. So it will come direct here, 32,340. Okay. Once I've done so, I'm now going to add this and this. I'll add the two of them. So 5,900 plus 32,400. 32,340. What do I get? Okay. So what I'm getting is 38,000. I'm getting 38,240. Let me verify it. I'm verifying. 32,340. Okay, yes, exactly. This is what I've gotten. So I have this one. This one now, there's another figure that must impact on it. The closing inventory. Okay, because we have done the purchases, we have done the carriage in. Okay, now we need to look at the purchases because there is no any other figure that we are supposed to work on it. So we are looking at the closing inventory. So closing inventory will be less the closing inventory figure according to the question is 15,550. 15,550. Okay, let us do our working there. Okay, so I've gotten 22,690. 22,690. So this will be the cost of sales. it comes direct here. 22,690. This is the cost of sales. Okay, so the cost of sales is directly, it affects our sales there. Okay, so we less now. We are going to subtract our cost of sales from the figure that we have there. Okay, so let us do our computations. 70,400 less 22,690. The figure that I get here is, I'm getting 48,000. Yeah, 48,025. 48,025. Okay, let me verify. My computations here. Less 22,690. Yeah, 48,000. No, here supposed to be like this. Okay, 48,025 ingwe. So this is what I get. What do we call this figure? This figure is called the gross profit. This is our gross profit. Okay, this is our gross profit. So our gross profit has two areas that must be worked on. If you have any gains, for instance, you have discount received, you have commission received, they impact directly on the gross profit. So in the question, we had a figure that was mentioned, which is commission received. So we are going to add, because it is a gain. Where we said add gains, okay, we are adding commission received. We are adding commission, we shall add them separately, and the figure for commission is 4,100. There is also another thing that must be added here. It's a discount received. It's a commission. It's a gain. Okay? Discount received. So the discount received, according to the question, we have 2,800. Okay, let us add the two. We see how much we are going to get. So when we add the 241 plus 28, we have 6,900. So it comes here. We add it to our gross profit. 6,900. Okay. So we are now going to add the two. 48,000 10 kwacha 25 ingwe plus 6,900. We have 54,910 kwacha 25 ingwe. Okay, so this is our adjusted gross profit. So our adjusted gross profit, because we have added the gains. Adjusted gross profit. So when we reach at this level, we now take care of the expenses. So we are now going to say less expenses. Less expenses. Okay. So if you remember well, the expenses that we have rent, we have transport. So I'll start with rent. So rent, this rent has an adjustment. The rental bill is 10,000 kwacha. Okay, that's the rental bill. Now we are told that on rent, there's an adjustment which is a prepaid. The total bill is 10,000, but this sole trader by the name of Peter Mwale had prepaid, or he had paid in advance. So we say less prepaid. Prepaid on rent. So he had paid in advance 3,400. So when we subtract here 3,400, the answer that we are going to get is 6,600. It doesn't come direct here because all the expenses must come this way. Now, because of space, allow me to use this other part to deal with the expenses. So the next expense will be electricity. So let me draw a line here. Electricity. Okay. Electricity, if you remember well, we had 1,200. But there was outstanding for last year. Okay. So it's electricity owing. Electricity owing. This must be added. So we add electricity owing. Okay, I'll just put it like this. Is 1,400. When we add the two, it gives us 2,600. Okay? The next expense, according to the question, is the next question is transport. So we have transport. Transport is 3,000 kwacha. Okay, this is transport for the period. But there was the other transport which was not recorded for tables as we read. It said another transport was used for the tables. So a 1,000 was used. So we added. This is extra transport which was not recorded. So when we add this, it will give us 4,000. Okay? It will give us 4,000. Then the next expense that we have is salaries. Okay? We have salaries and wages. Salaries and wages. So the figure for salaries and wages has no adjustment. It is straightforward. And the salaries and wages, we have 6,000 flat. The next figure is telephone bills. The telephone bills, according to the question, telephone bills, we have 620. No adjustments. Okay. Then the other figure that we have not worked on is the discount allowed. We allowed a discount. So this guy allowed a discount. So discount allowed. It's an expense. Okay. He allowed a discount of in the question. He allowed a discount of 571. Okay, there was a discount allowed of 571. Okay, then the next expense again on the question is the telephone bills we have done. No. Telephone bills. Telephone bills, the figure for telephone bills is 980. Sorry. Telephone bills is 980. Then the 620 is water bills in the question. We have water bills. Okay, that's the 620. Okay, so do we have any other expenses in the question? All the expenses are accounted for. So, which means we need to add. Let us add. So I have 66 plus C, 26 plus C, 4,000 plus C, 6,000 plus C, 980 plus C, 571 plus 620. Okay, my total expenses comes to 31,000. No, it comes to 21,871. Okay, this is the total expense. So what I need to do now, our gross profit is 54,910. So let us remove the total expenses. Total expenses. Okay, we are subtracting from our gross profit 54,910.25 minus 21,871. Okay, so the net profit that we get net profit that our sole trader Peter Mwale made is 33,000 and 59. 33,059 point. Let me bring it here. 39.25 there. So this is our net profit. So you can see that Peter Mwale, as a sole trader, he was able to make 33,039 kwacha 2025 way. So this is the income statement of a sole trader. It is as simple as what you have seen. See you in the next video.